Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday, and it's May 7th. Hope you guys had a wonderful weekend here. We got kind of a light, quiet day today here. We got nothing on the economic calendar. This week, in general, will be relatively a little bit more subdued than last week as we had a lot of data kind of piled into one week. This week, we do got some inflation data coming up. So we'll have on Wednesday will be the PPI, which is the inflation on the wholesale side of things, which isn't a big market mover, but the CPI on Thursday can be, especially when it came in pretty high the last one. The headline came in like at 2.6, and the core came in at 2.1. It's not the Fed's favorite gauge, but it can have an impact on the market. So be prepared for some volatility right there if it comes in, especially if it comes in a little higher here. Let's kind of move on here to the headline news. Stock market is currently up. We do got some earnings report. It's not the main thing that's driving the market. Say oil came up today. Oil came in up about $70 a barrel, which is what they'd like. But some of the things that could affect that later in the week is the geopolitical news. So we had a couple of representatives over in China. We'll start off with the China here, and basically came up with no agreement yet. They're still going to continue working on it before it ever reaches or escalates to a trade war. But as of right now, no deal was struck between the two countries. And now for Iran, we have, I believe this week, President Trump has to decide if he's going to continue with the pact, the nuclear pact that we had with Iran. Some people believe if he pulls from that nuclear agreement, that trade pact, or they're going to probably go into all those sanctions get reimposed onto Iran, and then of course that could be another spike into the oil market, as well as we'll have less demand, thus as they won't be able to really export their oil as well. So that will create a little bit more, wreak a little bit more havoc, so to speak, in the global markets here. Also, we got a few Fed speakers speaking today, so the investors want to hear more about possible interest rate hikes. So they'll be listening for that. If there's any mention of any sway one way or another, that could potentially move the markets as well. So just be look cautious in those areas. These are areas to listen for. But to kind of move on here, here's the bond market. We're kind of in this sideways pattern here. We haven't moved up or down here. We've kind of been this way for the last few days here, and it's good and bad, but it's going to at some point come to a fruition where we have to make a decision one way or other, and especially when we got inflation data coming up. The tendency might be that we could get pushed lower with inflation rising. It's rising a little bit here, so this could spook the bond market and put a little bit more pressure on bonds and push us lower here, which would in turn raise interest rates here. On the yields, we're kind of in the sideways pattern here. We're about 2.95 where we left off last week. And again, really no change. We're still below this threshold 90 at 2.989. And again, kind of the sideways pattern, same as the mortgage-backed securities here. So that pretty much wraps everything up. Rates are the same as what we left off last week. Haven't had any change in that aspect. But if you guys want to get some more data, just come over to Mike Bjork on Twitter. You can find me at Mike Bjork. I'll be posting it out today. We'll see what some of these, if there's any volatility, if some of these Fed people make any comments that might disrupt the markets. I'll be sure to put that out there as well on Twitter. So you guys have a great rest of your day. Thanks so much for watching. We'll see you guys tomorrow. Bye-bye.